In this video, we will discuss statement of financial position in detail. The first part of this financial statement is the title, which is comprising of 3 lines. First line is for the name of the business. In second line, we write the statement of financial position. And third line, we write as on 31st December 2018. Here I did not write for the year ended 31st December 2018 because the meaning of for the year ended and the meaning of as on is different. As on is written only for those financial statement which is prepared only for a particular time of point. So this does not cover the entire year activities. It only covers or it only represents this 31st December 2018. That's why statement of financial position is prepared only for a particular time of point. The first component of this financial statement is current asset. Those assets which are held by an entity for 1 year or less. It can give us benefit or the benefits of these assets are available for 1 year or less than 1 year. You can see cash and cash equivalent, short-term investments, inventory or stock, accounts receivable, another name of account receivable is debtor, any prepaid expenses, and any other current asset is written in the current asset category, and then we add all the current asset. Then we have total current assets here. After current asset, we represent fixed assets. According to IAS 16, property, plant and equipment, those items which are held by an entity for production of goods and services or for rentals to others or for administrative purposes, and future economic benefits are associated with these items are non-current assets, or we can say fixed assets. Here fixed assets can be further categorized into 2 categories. One is tangible fixed assets and other is intangible fixed asset. Tangible fixed assets are those which have some physical existence like property and equipment, leasehold improvements, furniture and fixture, motor vehicle. These are having physical existence. And non-physical existence, for example, goodwill, patent, copyright. So we add all these assets, total fixed assets. Total fixed asset, which is here, will be added to total current assets. Then we have total assets of the entity here, which is represented here in this column. Now there is a term for liabilities and owner equity in the balance sheet section. Liabilities are the obligations of the business, or you can say liabilities are the debts taken by the business. Here liabilities can be further categorized into 2 categories. One is current liability or short-term liabilities, and second is long-term liabilities. Current liabilities are those obligations of the business which are expected to be settled in 1 year or less than 1 year. For example, accounts payable, accrued wages mean wages payable, or any accrued payable compensation, income tax payable, and other current liabilities are listed here. Then we add all these current liabilities, then we have total current liabilities. After representing the current liabilities, we have to mention long-term liabilities. Those liabilities or obligations of the business which will go on for more than 1 year. For example, you have taken loan from bank, and this bank loan will be settled in 5 years in equal installments. This is long-term liability, so it should be mentioned under the heading of long-term liabilities. After calculating long-term liabilities, these liabilities are totaled with current liabilities, and then we have total liabilities. The last part of this statement of financial position is owner's equity. Owner's equity is basically the owner's claim to our total assets. Whatever owners have invested in the business, they can claim that we have claim in your total assets up to this limit. So it is comprising of share capital, which the company issued to general public. This is share capital. The amount received after issuance of shares, this is share capital. In case company earned some profit and did not distribute it to shareholders, this is retained earning or retained profit. So all other previous years retained earning will be added in share capital, and then we have total owner equity. Total owner equity and total liabilities are the sources of business assets. So total liabilities and total owner equity will be equals to total assets of the business here. Why? Because total assets of the business representing the economic resources. Here I want to elaborate the meaning of resources. Total assets of the business are economic resources of the business. These resources of the business come from different sources, and these sources are known as financing of the business. Liabilities and owner equity are capital structure of the business, from where we can raise money. We can raise money by taking debt from external parties, or we can raise money by issuance of shares. So owner's equity is the owner's claim to our total assets, and total liabilities are the creditor's claim to our total assets. In this way, this financial statement is comprising of three basic components. One is asset, second is liability, and third is owner equity. According to double entry accounting principle, assets must be equals to liabilities and owner's equity. Because there is a reason. Assets are economic resources, and economic resources come from two different sources. One is external financing and second is internal financing. So resources of the business must be equal to sources of the business. So this statement of financial position tells us the financial worthiness of the business for a particular time period. I hope this understanding or this lesson will give you enough knowledge how to make this financial statement and how to interpret these different figures of this financial statement. Thank you very much for watching this video.